Good morning, everyone. This is Rick Marr. I want to thank everyone for joining us this morning. There's a lot of moving parts to our presentation, and I will let you know that there has been additional guidance from the Small Business Administration up until literally moments before we've gotten on this call. So we're going to give you the information as we have it up to date, and we'll get started. So as I said, my name is Rick Marr. I'm the CEO of Turning Point Human Capital Management. We are a fractional human resources business with 24 human resources professionals. We started this business in January of 2010 in the depths of the last Great Recession. We don't know what this one's going to be called yet, but we know it'll have a title. We understand what hard times can do to companies and their employees. Since we started in 2010, we've worked with more than 900 businesses dealing with all aspects of their human resources. Since we deal with so many companies who are all asking the same questions, we decided to share what we know with all of you today as it relates to the CARES Act. And what I would say is, in many instances, we're applying logical concepts to an illogical situation, and that's where we find ourselves today. So as a housekeeping item, we are recording this presentation. It will be posted on our website at turningpointhcm.com/webinars within a few hours. We will have a question and answer session at the end of this presentation. The presentation will last about 25 minutes, and then we have an SBA, Small Business Administration, loan expert on the line to answer all of your questions. I will introduce him shortly. You may use the chat function or the Q&A tab, and we'll hold all those answers till the end of the presentation. And then after this, you'll receive a 3-question questionnaire. We'll ask all of you to please complete it, as we will be using this to do an update potentially next week as this law and its interpretations develop over the next few days. So why are we here? We're going to stay focused on one thing on this call or on this webinar: how to help business owners get the money they need with the current choices that are available through the 2 SBA programs. The first program is the Economic Injury Disaster Loan, or EIDL, EIDL, I call it for short. And the second is through the Payroll Protection Plan, the PPP, which was recently passed by the House and Senate and then signed into law by President Trump last Friday, which seems like a million years ago, March 27th, 2020. As you can imagine, there are questions surrounding calculations, definitions in an 880-page, $2.2 trillion bill. And we've seen quite a bit of evidence of that in the last 12 hours. Those questions sometimes, the questions and those issues sometimes require further guidance. Since some of this information in this session may be updated, we are planning, depending on the information and when it comes out, to do an updated session sometime early next week. It is also why we have an expert panelist on this webinar to answer your questions at the end of this session. So on the line, we have Jason Kohl. Jason's the owner of Kohl Capital Associates. He's an SBA Program Specialist, and he's an expert in all areas of SBA funding and has been advising clients for many years. He's an unbelievable resource and can help any business, as he has already helped Turning Point HCM. Jason will be answering questions at the end of this presentation as mentioned. Additionally, I would like to recognize the Turning Point's, our banking and accounting team, as they are on this webinar as guests, but not panelists. First, Devin Kiernan. Devin is the Associate Group Director and Vice President for Signature Bank in Garden City. And second is Michael Focus, who is a partner and CPA at JT Shulman & Co. in Carl Place. They've been tremendous resources, partners, and friends. So just to give you a highlight, last night between 11 p.m. and 1 a.m., all three of us, I was on the phone with all three of them at different times as the guidance from the SBA was coming out fast and furious late last night. So thank you to everyone who stepped up to help decipher all the moving parts of this behemoth legislation that is important to all of us who are small businesses. So the landscape as it stands today, the declaration of disaster. On March 13th, 2020, President Trump declared the COVID-19 pandemic a national emergency. This authorized the SBA to implement the Economic Injury Disaster Loan, EIDL. The EIDL is a program to inject smaller amounts of cash into a business. On March 27th, 2020, as referenced before, President Trump signed the CARES Act, which stands for the Coronavirus Aid, Relief, and Economic Security Act. It is intended to assist business owners with whatever needs they have right now. So, Economic Injury Disaster Loan, what is it, right? EIDL. The Small Business Administration's disaster loans are the primary form of federal assistance for the repair and rebuilding of non-farm private sector disaster losses. The disaster loan program is the only form of SBA assistance not limited to small businesses. The Economic Injury Disaster Loan can provide up to $2 million of financial assistance. The actual loan amounts are based on, economic injury and ability to pay and all those sorts of things, to small businesses or private nonprofit organizations that suffer substantial economic injury as a result of the declared disaster, regardless of whether the applicant sustained physical damage. So typically we would think of disasters as a hurricane or a tornado or some other horrible thing like that. In this case, it is an invisible enemy, as we've heard in the press. So what is it used for? An EIDL can help you meet necessary financial obligations that your business could have met had the disaster not occurred. It provides relief for economic injury caused directly by the disaster and permits you to maintain a reasonable working capital position during the period affected by the disaster. EIDLs do not replace lost sales or revenue. So the general program requirements: to be eligible for the EIDL assistance, small businesses must have sustained economic injury and be located in a disaster-declared county or contiguous county. Well, we don't have to worry about that because the entire country was declared a disaster area, so all businesses should be applying for this. The loan terms. The SBA can provide up to $2 million in disaster assistance to businesses. The $2 million loan cap includes both physical disaster loans and EIDLs, right? So there are no upfront fees or early payment penalties charged by the SBA, and the repayment term will be determined on your ability to repay the loan. So each business will get its own terms from the SBA if they decide to accept your application. So how to apply? So like most programs, there's going to be a level of self-service, and then there will be those that want professional help in navigating the SBA process. For those that are DIYers, do-it-yourselfers, here's the information to start your application. You can go online. You can apply at the SBA website. You can email them. You can use the website, as I mentioned, which is sba.gov. It's on top there, sba.gov. Or you can call them at 800-659-2955. Email disastercustomerservice@sba.gov. Probably not a tremendous stretch to say it will be difficult to get through to customer service or by phone, and it'll be difficult to navigate this maze. So forms that have been traditionally needed through this application process, if you want to do it the old-fashioned way, there's a schedule of liabilities, there's the U.S. SBA Economic Injury Disaster Loan Supporting Information, personal financial statement, disaster loan business application, and Form 4506T, which is a request for your tax returns. So the third way is to use a professional, right? To get help from professional advice. So the question you should be asking yourself is, should I get help or should I do this myself? I think this is a big question. There are SBA consultants and direct lenders who've been doing this for years. It's up to you to decide if you want to take advantage of this expertise to expedite the application process. Additionally, they know the ins and outs of the application process. Their expertise could be the difference between a quickly approved loan and one that goes to the bottom of the pile. So just a side commentary. My business, we applied for that economic injury disaster loan on Monday at 7:30 a.m. We received a claim number or account number, and to date, we have not received any knowledge or notification or email back indicating what's happening. Additionally, everyone who applies for the EIDL, at the end of that application, there's a checkbox that you may want to apply for a $10,000 upfront grant. That's forgivable, and it's whether you take the loan or not, it's available to you. That loan was supposed to have been funded at $10,000 within 3 business days of your application. So to date, as I mentioned, 7:30 on Monday, we have not received any of those funds, and many of the businesses that we're advising are the same way. So I think that commentary is helping set expectations of what the intentions are, what we're hearing in the news, and what is actually happening on the ground. So we'll continue to monitor those things and keep going forward. So the next part of the loan is the Paycheck Protection Program, or PPP loan. So this program would provide cash flow assistance through 100% federally guaranteed loans to employers who maintain their payroll during this emergency. If employers maintain their payroll, the loans would be forgiven, which would help the workers remain employed, as well as help affected small businesses and our economy snap back quicker after the crisis. Again, side commentary, since this was updated, this presentation, yesterday 6.6 million people applied for unemployment insurance, 3.3 the week before. As many of you may have seen this morning, the monthly job numbers were a negative 701,000. So businesses are being affected, and these 2 loans are very important to a lot of small businesses. The PPP has a host of attractive features, such as forgiveness of up to 8 weeks of payroll based on employee retention and salary levels, no SBA fees, and at least 6 months of deferral, with maximum deferrals of up to a year for repayment, if there is any that's not forgiven. Small businesses and other eligible entities will be able to apply if they were harmed by COVID-19 between February 15th, 2020 and June 30th, 2020. This program would be retroactive to February 15th, 2020, in order to help bring workers who may have already been laid off or furloughed back onto payrolls. The loans are available through June 30th, 2020. So what types of businesses are eligible? So businesses and entities must have been in operation on February 15th, 2020. And those are small business concerns, as well as any business concern, a 501c3 nonprofit, a 501c19 veterans organization, or tribal business concern described in section 31B2C, and has fewer than 500 employees. Individuals who operate sole proprietorships or as an independent contractor and eligible self-employed individuals are eligible for this loan. So as I said, any business concern that has no more than 500 employees is eligible. So how is the size of the loan determined? This is interesting. We've gotten late night, early morning guidance on the calculations, and people were preparing for certain calculations, and those seem to have changed as of the SBA, Small Business Administration, interim final rule, which was issued last evening, about 11 o'clock, as I mentioned. and that is the docket number, if anyone wants to look it up, docket number SBA-2020-0015. It's a 31-page document that gives updated guidance, and for assumption's sake, we'll assume that will be updated again at some point in the near future. So we'll keep you posted there. So how is the size of the loan determined? Depending on your business's situation, the loan size will be calculated in different ways. The maximum loan size, though, is always $10 million. So your max loan is equal to 250% of your average monthly payroll costs for 2019. If your business employs seasonal workers, you can opt to choose March 1st, 2019 as your time period and start date. So as I mentioned, we're hearing some competing guidance on this calculation, and we're monitoring that. And we encourage you to ask the question at the end of this of our SBA expert, Jason, and keep in touch with your financial institution. Okay. So what costs are eligible / not eligible for payroll? So this is sort of where the guidance has seemed to have changed or become clearer. And the compensation is any salary, wage, commission, or similar compensation, payment of cash, tip, or equivalent. I think the key word there is similar compensation to be thinking about. Payment for vacation, parental or family medical sick leave, allowance for dismissals or separations, payment required for the provision of group health care benefits, including insurance premiums, payment of any retirement benefit, and payment of state or local taxes assessed on the compensation of employees. Again, we're getting updated guidance, and we'll continue to monitor that situation. Not eligible is the employee or owner compensation over $100,000. So if you are doing your calculation and you make $110,000, essentially only $100,000 of that can be applied towards the calculation of this loan. So what are the allowable uses of the proceeds of the loan? So what costs are eligible? I'm sorry. The payroll costs, as noted above in the last slide, and the costs related to the continuation of healthcare benefits during the periods of paid sick, medical, or family leave, and those insurance premiums, employees' salaries, commissions, or similar compensations, payments of interest on any mortgage obligation, which shall not include any prepayment or payment of principal on a mortgage obligation. So again, you want to make sure that you're talking to someone who understands these calculations. Rent, including rent under a lease agreement, utilities, and interest on any other debt obligations that were incurred before the covered period. Okay. So once you get a loan and you use it, how do you get forgiveness for that loan? So it becomes a pass-through event, not a taxable event. So forgiveness on a covered loan is equal to the sum of the following payroll costs incurred during the covered 8-week period compared to the previous year or time period. So payroll costs plus any payment of interest on any covered mortgage obligation, plus any payment of any covered rent obligations, plus any covered utility payment. So how do I get forgiveness for this loan once I've gotten it, right? So you must apply through your lender for forgiveness on your loan. In this application, when you apply for forgiveness, you must include documentation verifying the number of employees on payroll and pay rates, including IRS payroll tax filings, state income, payroll, and unemployment insurance filings. Documentation verifying payments on covered mortgage obligations, lease obligations, and utilities. Certification from a representative of your business or organization that is authorized to certify that the documentation provided is true and that the amount that is being forgiven was used in accordance with the program's guidelines. So on that, there's been some additional guidance that we're digesting now of potential penalties, for making inaccurate statements, during this time. So where should I go to get a PPP loan, right? So the thought that comes to my mind is like the beginning of an old joke. Two people walk into a bank, right? One has a banking relationship and one doesn't, right? So as you may have heard, and it's breaking on the news, many of the larger banks, although the Secretary of the Treasury and Steve Mnuchin yesterday said that today those loans banks would be open to take those loans and that the money would be funded in the same day, that does not appear to be what's happening on the ground. Many banks are advising their clients that they, A, will either only help their clients at this time, or B, they're not ready to accept applications for anyone because the guidance is not clear, right? So then it may require some alternative support, like the person, Jason, we have on the call. So, so really think about these next 24 or 36 hours of who your banking relationship is, being prepared to react to their needs for this loan or this application, and being prepared that you may need to seek alternative guidance and professional support from direct 7A lenders. So thank you for joining us. Here's our contact information. Now we're going to open it up to the question and answer session. So I'm going to open that up. I'm going to open up our panelists. So you have the chat function, you have the Q&A function. And we'll, as I mentioned, our goal is to potentially repeat this seminar next week, depending on how many changes come about and what the conditions on the ground are on Monday, which really seems like a million years from now. So we're not sure what's going to happen, but we're going to stay on top of it. Additionally, I mentioned, as soon as this call is over, you will receive a 3-question survey poll. If you would, please, it should take all of 4 seconds to complete. We ask you to complete it. It helps us keep on track, bringing new information to all of you. So now I'd like to introduce Jason Kohl of Kohl Capital. And hi, Jason, how are you?
Hey, good morning, Rick.
Good
how
morning.
are you doing today?
Good, good. So we have questions. So Jason, I'll read out the questions. If you can take a couple of minutes on each question, I'm sure many of them are going to be very, very detailed and may require more conversation after this call. But we're going to try to get through every question in the time that we have remaining, which is, we have till the end of the hour, and we'll continue from there. So let's jump into the first question. So first question, are there any provisions to help summer seasonal businesses that normally don't begin to operate until Memorial Day weekend? Obviously, they have no payroll or revenue until then.
Right. Well, there's mention of what the government calls seasonal, but I think it's more geared toward the planting season in places outside of New York and Long Island, I suppose. But seasonal in terms of a restaurant or summer, it's not really accommodated specifically for that. But so the calculation of the max loan amount is what it is, the payroll for the last 12 months. You can get, augmented help can come from the EIDL, the EIDL, with additional working capital for, several months of working capital is what the intention of the EIDL is for as well. So combination of both, maybe we can help a company that's summer seasonal.
Okay, great, perfect. Next question.
By the way, can I add something there, Rick?
Yes, please.
Somebody that opens Memorial Day is certainly not going to hire people today using the PPP loan. So that's a little bit of a tricky situation.
So I think this goes back to, we're trying to use logic in an illogical situation, and those kinds of specifics will require, further conversation. I think Jason and some of the other folks we mentioned earlier are great resources for those. So thank you. So next question. Does it include sole proprietors who file Schedule C Form 1040? And is there any restriction to a nonprofit that employs lobbyists?
So the Schedule C on a 1040 is definitely one of the eligible businesses that can apply. As long as they hire people and have employees, then they'll qualify for the PPP program.
Okay.
As far as nonprofits go, to a nonprofit that employs lobbyists, there is language about lobbyists in SBA. So it's not mentioned specifically on the application, but 7A rules and making a business ineligible, it has some language about lobbyists. So depends on a few things. We'll have to talk about that a little bit later.
Okay.
Take some research.
Next question. So 1099 or K1 income eligible for the SBA I'm going to read through. Let me add here. Are 1099 or K1 incomes eligible for the SBA loan? And if yes, how do we complete the SBA application regarding average payroll?
Right. So one of the moving parts here and the changing landscape of the rules is the 1099 income. Is it or is it not to be used in the calculation of the loan amount? Rick, do you think that's final? I'm not sure. I think we're still debating it.
So in reading, and I mentioned this form earlier, the SBA docket number SBA-2020-0015, which is a 31-page update on guidance, there's seems to be conflicting or at least vague interpretations. So on one section, on page 6 of that document, for those of you that have it or are interested, it defines or it mentions 1099 income. So it says if you were in operation on February 15, 2020, and either had employees for whom you paid salaries and payroll taxes or paid independent contractors as reported on Form 1099 MISC. And then in a subsequent page, on page 11, it says, do independent contractors count as employees for purposes of PPP loan calculations? And that answer is no. Independent contractors have the ability to apply for a PPP loan on their own, so they do not count for purposes of a borrower's PPP loan calculation. So I think the guidance, I don't believe, is final because they named this interim final rule. So interim means it's not final. And I believe that the calculations for many people included those things up until last night at about 11 o'clock. And, you know, I think there's different people who are interpreting it differently. And I think there's going to be still some clarification around that. So that's one of the key provisions that we'll be looking at. Next question. Other than group health, what other insurances can be paid for with the loan proceeds, such as property casualty, workers' comp, etc.?
Right. Talking about the use of funds, what's the allowable use of funds?
Yes.
They don't specifically mention insurance anymore. They did in the beginning. They don't now. It's utilities, rent, mortgage, and payroll costs. Within payroll costs, I suppose there's workman's comp, but the actual use of funds doesn't specifically. I don't think it specifically says insurance anymore, to tell you the truth.
Yeah, so I think that's another example of a definition of what is a payroll cost, and I think that is another issue that is creating lack of clarity at this point. So next question. Just to clarify, you can only have either the EIDL or the PPP. You cannot have both.
Right. That was true in the beginning. It was rewritten and modified. So now today you can do both. It's allowed.
Right. Okay. So the answer is yes, and you should be applying. Our advice is that you should be applying for both.
Definitely.
Great. Okay. Next question. If our payroll is all cash and not via bank check, nor verifiable, how do we apply for loans?
I don't
Yeah.
think you can, because
Yeah,
you have to supply payroll data, federal forms, the 941 that shows that you paid payroll taxes.
and from an HR perspective, that might be something we want to reconsider. And the person who asked that question, if you'd like to contact me afterwards, that would be great. I think that there are many questions surrounding that question. So thank you for that question. Okay, next question. If a business laid off employees and the employee is receiving unemployment benefits and the company receives the PPP loan, will the unemployment benefits be clawed back?
The unemployment benefits. I don't think so. I think it's totally separate things.
Yeah.
Am I thinking through that right?
Yeah. Again, we're applying logic to an illogical situation. We have not seen any language that said it would be clawed back, because part of the PPP would be that if you laid people off between, after February 15th in response to this, that you would bring them back when you get the PPP loan. So
Right.
not sure that those benefits would be clawed back.
Yeah, there's no you can still get the PPP if you've already laid off your staff, which many restaurants have, or at least cut back drastically. So it's expected that people be on unemployment. So it goes simultaneous and together.
Okay. So all right. So a follow-up question about the lobbyists. So lobbyists under SBA. What about under the CARES Act?
Well, the CARES Act and this PPP program follows the rules and references the rules of the general 7A program, which is clearly defined by the standard operating procedures, and that's the rule book of 7A. So there's cross-referencing of that within the body of this at times. So a lobbyist, that's a very specific question. It's a red flag for me, because it's one of the things mentioned in the SBA rules in general. So I'd have to do a little more digging on that.
Okay, great, thank you. So the next question, on the application, average monthly payroll for the last 12 months. Also, number of jobs. What exactly does that mean?
Well, the number of jobs is a changed field. Now it says number of employees, which is what they meant to say. That appears on the new application. Average. The question was, what's the average payroll?
So the average payroll the last 12 months, also the number of jobs. What does
Right.
jobs actually mean? I think that's what you're referencing.
Okay, so the simple answer, the field was changed on the revised final application. So you'll see the word employees instead of jobs.
So what Jason is referencing there, folks, is yes. Well, I saw it for the first time at about 12:30 a.m. this morning. There's a new application that's out. So many of you might have seen an application for the PPP that was floating around the past few days, may have already completed it, submitted it to your lender. There's a new application that was put out last evening. So I encourage you to get a copy of that, to look at it. And I think it may be, I'm going to take a leap here and say it may be a little more clear, but maybe clear as mud at this point. So who knows? But there is a new application out. So let's see, we have a few more questions. Okay. All right, let's start at the top. Okay, so we answered the question, just to look to see what is already asked. You can only have either EIDL or PPP. You cannot have both. So we answered that you can. Okay. All right, so here's a question. At the beginning of the seminar, you said EIDL is not for economic injury due to lost sales. It's exactly the lost sales that does not yield income for a firm. Not sure I understand this.
Right. So economic injury disaster loan is meant it's geared to cover your operating expenses and fixed costs that occur to a business when sales go down. and you still have to cover those fixed costs, let's say. So for several months working capital until sales recover. So that's what that whole product is geared for. Now remember, the disaster loan is something that they take off the shelf for every disaster. So many times the disaster is short-lived in terms of compared to what we're in now. So so they are handling it a little differently, but it is not directly for lost sales per se. It's to cover those fixed costs until the disaster recedes and things get better.
Great, thanks. Next question. If I run my own marketing firm and have had a client fire me because of their loss of income due to COVID-19, am I eligible for a disaster relief emergency loan?
So if you have your own marketing firm, I'm assuming you're some type of entity, and that they paid you as a 1099, you're eligible because you as that company can apply for, according to the rules as they've been steadily revised, you can apply for the PPP. Now, as long as you have employees yourself, you can apply for PPP. That's the caveat there.
Great. The next question is, my understanding of the EIDL was that the $10,000 was a loan advance, not a grant. Please clarify.
Right. They call it an advance, and it is. I know somewhere in the law it's written about as emergency grant. So as far as I know, I'm pretty sure it is definitely a $10,000 grant that does not have to be paid back. You'll get that in faster fashion. Then ultimately in a couple of weeks they will come up with the main loan from the EIDL that you will be offered, which you don't have to take it. You can take it. It depends on what you want to do.
Great.
Either way, you can keep the $10,000.
Perfect. Great. Our primary care medical group hires physicians as independent contractors. Do these qualify for PPP?
Well, according to the new rule book as it existed prior to this call, 1099, anybody that's paid a 1099 is not included in the calculation of the loan for PPP. So those individuals have to go with their own company and consider their options.
Right. Okay, regarding the number of employees on the PPP app, is that full-time employee, or do we need to calculate full-time equivalent employees? Many of our employees are part-time.
Okay, it's a very good question, because the maximum loan amount is calculated by annual payroll. And when it comes down to the forgiveness, there's a calculation that has to do with calculating the full-time equivalent employees, which has, they wanted the rule basically to get a forgiven loan. Your full-time employees have to be the same as they were in, prior to the disaster in order to qualify for the forgiveness of that part. So that's where the full-time equivalent calculation comes in, but not in the beginning when you're calculating payroll and the maximum loan.
Okay, forgive me. Okay, so we had a similar question. What about part-timers? How do they count the number of employees? I assume that's the same. That's the same question. So let's see here. Let's see. We got a few more. Is there a list of supporting documents required for the PPP application?
The PPP application is it's completely streamlined. You need the application, and most banks now are struggling with what type of information they have to take in addition to that. But one thing is for sure, you need the application and all the backup material you have to calculate the loan amount that you're putting into the application. You take your monthly payroll times 2.5, resulting in the loan amount. So you have to show how did you arrive at the monthly average payroll. So you need to provide information from your payroll provider. You have to provide information like the federal form 941, which lays out all your quarterly payroll tax filings, all those type of things from third parties and governmental bodies that can be verified that shows where you got the numbers.
Yeah, and I'll just add, I've seen from several different places, where banks, SBA lenders, guidance, etc. They're all what you would think, kind of what Jason was referencing, but they're all seem to be a little bit different. There's not a standard SBA, here's what we want, here's what we need. Each bank seems to be, or each institution seems to be using something a little bit different. But to Jason's point, whatever you're putting on there, you should make sure that you have some backup or reason or how you came to that number. I think that's part of it. Next question, will this presentation be available to view, listen again? Yes, this will be on our website within a few hours. Excuse me. It'll be on turningpointhcm.com/webinars. It's where you registered. So turningpointhcm.com/webinars. It'll be up in a few hours, and we will alert each participant when that is on. Okay. So we got a few more questions here. Let's see. Let me see, where did I leave off here? What if my business doesn't have employees hired? All payable expenses are as per services provided. Not sure.
I didn't understand that.
Yeah, I'm not sure. I'm not sure I understand that question either. But I think it ties back to cash payroll and such that we kind of addressed earlier. So can a sole proprietor apply for the EIDL or just the PPP?
Sole proprietor can apply for both.
Okay, perfect.
As long as they're eligible.
Under the EIDL, does the 1099 entity have to file a corporate tax return? What if the 1099 income is blended into their personal tax return?
That's perfectly legitimate and eligible for the EIDL. That's that's one of the sole proprietor is one of the, not necessarily sole proprietor, but an entity like that, whether it's LLC or sole proprietor can do that.
The next question is, for PPP loan, does one include partner K1 pay for average monthly payroll figures?
Say that once more. I didn't get it.
For PPP loan, does one include partner K1 pay for average monthly payroll figures?
That's a category that falls under the similar compensation umbrella. Yep. That's part of the definition of payroll costs. So at this moment, I say include that. What do you think, Rick?
Yeah, I agree. That would be similar compensation in my mind from what I've read. Next question: what banks have you heard are participating? So to this question, I would say you have to check news sources. You have to check your own bank. Various conversations. So these are things that are bouncing around the news. Who's participating and who's not? That should be, you should be kind of monitoring that with your financial institution. All right, let's see if we have any more questions here. Good question. How should we document where the loan's funds are spent? Should we have a separate account?
Well, separate account would be, I guess, an ideal situation, but not as practical. But you have to keep track of, detailed payroll costs, because you're going to have to show how the period that you have an 8-week period to comply with the forgiveness part. So there's an 8-week period that's monitored and counted. So the payroll has to meet the criteria from the 8-week period to prior to the disaster. You have to track utility expenses that you spent. That would be, cancel check and bills, rent payments. Again, any documentation that you would use to show that you paid something, whether it's a money transfer on a bank account, I guess, or a check, however you did that. But payroll is going to be the most important thing to track in detail. Great.
If I only have part-time employees, can I apply for the PPP?
Right. If the rule states if you have salaried employees, you can apply for the PPP.
And when you say salaried, you mean hourly pay as well?
Yeah, anybody, and if you're paying payroll taxes, you are eligible for the PPP.
Great. All right, so it looks like we've gone through all the questions, so I'll just hold on a moment here to see if there are any further questions. But while we're waiting for that, I'd like to thank Jason for being on the call and being so accessible. He has not slept much, I can tell you that for sure, because I've spoken to him at 1 in the morning and again at 5 in the morning. So there's not much sleep happening there. He's all over these bills, these updates, and is a tremendous resource. So if you'd like to get in touch with him, please send us an email and we'll make sure that happens. We ask that we're going to send you a survey in a few minutes after this phone call or after this webinar. It should only take 3 seconds. It's 3 questions, yes, no type of questions, to complete this. So it helps us help you and help others. And that's really the goal, is to make sure that as we go back to the beginning of this presentation, helping business owners get the money for their business. That's what we're here to try to help and just be a resource. So I want to thank everyone for joining. Wish everyone stay safe and stay healthy. And hopefully we'll all be through this in a short period of time. Thank you for listening and have a great day. Thank you.